Hello, everybody. Thank you for actually coming in for the presentation itself and giving me the opportunity to share the story about my company, which I founded in 2019. And since then, we've been just growing. So I am Piyush Sani, founder and CEO of Dr. PhoneFix, and I'm here to tell my story. So, quick question: who has phones here? Can raise hands? Okay, everybody, I guess. Who has two phones here? I'm going to raise my hand. Okay, so I'm not going to ask the third question that who has three, because some people also have three phones. So this is what my company does. We bring technology back to life. If it's broken, we connect people back into the world. Because who can keep eyes out of their phones? Everybody wants to see their phones in every 2 minutes. So, or I will say every 30 seconds, everybody's on their phones. So if your phone's broken, so you know where to come now. Okay, so these are disclaimers. Standard disclaimers itself with forward-looking statements. So I'm just going to skip to that. Next slide itself. So you're going to be shocked, guys. Like 600 Canadians break their phone every hour. And that's the stats from 2021. This number has gone way up. Angus Reid, one of the researchers in this field, did a study and found out that when the phone is broken, people want to get the phone fixed right away. And 76% Canadians prefer to get the devices repaired versus going and buying a new one. Everybody signed 2 years or 3 years contracts. So they prefer getting it repaired versus going and renewing the contract itself and paying an upfront fee. The price tag on these phones has substantially gone up 50% since the last survey done in 2017. We got phones ranging from 2,500. We got phones like Samsung, which I have. The Fold Samsung is actually going up to 3,000. So they come with a hefty price tag, and when it breaks, it costs an arm and leg to get it repaired. While the repair revenue is growing, sorry, I'm just going to go back again, and I'm going to tell you one more stat, which is not on this presentation, is there's lots of insurance companies on the stats. One of them is Allstate, and Allstate did the insurance of phones, and they have reported in 2023 that 78 million Americans have actually got their devices repaired and have contributed to the $149 billion repair industry. So there's lots of billions in this repair industry, guys, and it's still growing. And that's the stat from 2023 itself. The numbers have gone way up. While the repair revenue is growing, the repair industry is blooming. The next biggest juggernaut in this category itself is this used phones device market. The new handset device sales have actually gone down year over year. There's a decline of 12%. Whereas the brand new devices, whereas the used phone devices are actually going in an upward direction. So in less than 5 years, it's going to be at $153 billion market cap, which is growing at a CAGR of 11.5%. In fact, 500 million devices shipped across the planet by 2028 will be used devices. So this is an exciting category, and I give since the launch of the first iPhone itself, guys, when Steve Jobs introduced the smartphone to the world, I think he did not foresee that he's actually giving part to two more categories onto the planet, which is repair and resale. So this is the next biggest excitement after the launch of the first iPhones. What we do. So we are carrier-neutral device care repair stores. We were founded in 2019. Since then, we've been growing. We've got about 35 locations across Canada. And we specialize in device cell phone repairs, everything which is mobile. So your cell phones, watches, laptops. So if it's broken, you come to Dr. PhoneFix, get it repaired. Why people love us? Because we provide same-day repair services. So you walk into Dr. PhoneFix, you go grab yourself a coffee, your device ready for pickup. So in less than 60 minutes, we are able to get the device back to working conditions, and that's evident by our 30,000 Google reviews. We've also shared award stages locally and internationally in Rome, London, Paris with other telecom companies and other big names such as Canadian Tire, Hugo Boss, and have actually won awards in those categories, which is consumer choice related. So we're proud of that. No. So I was about to come to that. So no, 35 is all existing locations. So we just did an acquisition yesterday, guys. 6 stores, we added 6 stores underneath our belt at the Atlantic region. And that is our forward-looking path of taking this company coast to coast. So our revenue is a mixture of 3 primary categories: repairs, used devices, and accessories. Repairs at 66%. The certified pre-owned devices at 80%. I don't call them used devices. We call them certified pre-owned because when we sell a phone at Dr. Phone Fix, you get a 1-year warranty, which is similar to a manufacturer's warranty. So if you buy a phone, we can take it anywhere to any location of Dr. Phone Fix and get the same level as a manufacturer's one. All our repairs are also coming with lifetime warranty as well. So that actually separates us from our primary competitor, which we're going to see in the first slide. And the rest is coming from accessories. Just on this note, as I've told you that the CPOs category or the used phone device category is growing globally, we are seeing the same in our business as well. This is also exceeding. I'm a builder, guys. I love to make relationships, love to build relationships. Since the launch of my first iPhone, I've gone in and built relationships with the 2 biggest manufacturers on the planet, Apple and Samsung. So we are their providers. We have relationships with them. Apart from building relationships with the manufacturers, I have built relationships with the 2 biggest insurance companies on the planet as well, Likewise and Assurant. We've entered into Likewise a national repair agreement. So I don't know if you guys know about Likewise. So Likewise is the insurance partner for Rogers. So if anybody has a Rogers device and if it's broken, they contact Likewise and Likewise sends them to Dr. Phone Fix. So we just announced that national repair agreement with them. Our second strategic partnership is with the other insurance company, Assurant. So what does Assurant? I don't know if anybody knows Assurant or not, but Assurant is again in 30 countries. They're the one behind Costco insurances. So if you have an electronics you bought from Costco, so Assurant is the one backing that. Assurant is the one behind Samsung Care Plus, like the manufacturer's warranty as well. Assurant is one of the leaders in this mobile technology insurance itself, and they're the one also behind MasterCard insurance. So if your device is broken, if you bought in a phone through your MasterCard, so if it's broken, Assurant can take care of the repairs on that. So we've announced our partnership with Assurant as well, and it's a strategic partnership, guys. So together, Assurant and us are growing the certified pre-owned categories and of phone sales in Canada. So as I've told you, like why people love us, 60 minutes on an average waiting time. Why do insurance companies and the manufacturer love us? You come into Dr. Phone Fix, get a device fixed in 60 minutes. Historically, when somebody had to get the devices fixed, they used to either send it to the manufacturers or to the insurance companies by mail in a box or a courier, and the turnaround time was 3 to 4 business days. And what if you lose the box itself? Then insurance were on the hook actually to give your device back to. So the repair process was 3 to 4 days, and we've turned them down to 60 minutes. We are carrier neutral. That's a specialty. Our partnerships have introduced to us enhanced supply chains, which means that we don't have any wholesalers in the middle. So we buy directly from the manufacturers, giving a boost to the gross margin itself. One of the most important thing why manufacturers and the insurance company love us is our data security protocols and procedures in places. So phones is one of the most personal items anybody could have. Is your new age digital album, it's your wallet, it's everything. So if you lose a phone, you lose everything on it as well. And the insurance companies and the manufacturers take a look at that aspect of the business very carefully. And we are proud to say that our procedures and protocols, which we have implemented, has been looked under the microscope by the manufacturers and both by the insurance companies. And that's how we were able to maintain that relationship and build on that. So we have everything in place. So we've been growing aggressively, as you guys can see. During our growth itself, we've been named the 10th fastest growing company in Canada by Globe and Mail. And recently, we've been announced the fastest growing company in North America by Financial Times. This chart actually tells you guys how fragmented the industry is in Canada. It's all mom and pop shops or individual store owners, and they're across 1,800 plus stores across Canada. Our only competitor in this field, who is a mobile clinic, which was acquired by TELUS back in 2020 for 165 million, 80 locations. We are competing directly with them, and we are at 2% market share. We've got lots of room to grow, lots of room to consolidate the market itself, and which we have done it yesterday with an announcement, and the announcement just went in today itself that we acquired 6 stores and building on our store count itself. We are on track to actually double our store count in the next 12 to 18 months. Yeah. So it's going to be majority of it's going to be M&As. We're going to be acquiring locations. We were already in discussions. So this is one of my favorite slides. It tells you who's dancing with whom. So Assurian, I don't know if you guys know Assurian as well. It's one of the insurance providers as well. They acquired a US-based franchisee chain, Ubreak IFX, back in 2019. Couple months after that, Assurant, whom we are with strategic partnership with, they acquired the next big chain out there called CPR, cell phone repair, again, franchisee stores. Then we were hit by COVID. Mobile clinic used to be in malls. The malls were shut down, and TELUS went in and acquired mobile clinic mid of COVID, July 2020, 80 locations for 165 million. So I sold my business basically to mobile clinic before. So I'll tell you about my history as well, that I've been in the cell phone repair space back from the launch of the first iPhone since 2019. I have founded, operated, and exited 3 other cell phone chains, cell phone related businesses basically, and this is my 4th venture. So at my previous business, I sold to mobile clinic. I stayed on with them for a while. And then when I exited, they were sold out to TELUS. So TELUS after acquiring mobile clinic, TELUS acquired the next big chain out there in Canada, which is Ubreak IFX Canadian arm, all franchises again. TELUS acquired 50 stores. TELUS did not even stop at the Canadian border. They went into United Kingdom and acquired a 30-store chain, iSmash. Assurant, few months after that, acquired the next big chain out there, which is Pocket Geek Tech Repair, 19 locations. So as you can see, the location counts, the consolidated or corporate locations does not exist. The numbers are actually very less. People having 80 or 50 or 30 locations does not exist anymore in a corporate world, in our category itself. And we are building this to the next level, doubling the store count. And we are, again, one of the preferred, partners and providers of all these companies which are doing the consolidation in this space. So I guess this is my favorite slide. I hate skipping from the slide, but I love it. But I have to keep going. Apart from building businesses, so we have given back to the community as well. We partnered with Call to Recycle, one of the non-profit recyclers in Canada, where we've recycled over 35,000 batteries, which were otherwise they would have gone into landfills. So we are doing our due diligence and are part of sustainability. This is our financial performance. As you can see, our revenue has been growing. We have a solid gross margin of 53%. And we are on track to hit this year $13 million in revenue. This is the leadership team. I'll just tell you about myself, guys. Like I said, I have been in the space for quite some time. I've founded and operated 3 other cell phone repair companies. Dr. Phone Fix is my fourth venture. Sunil Goyal, on the faces itself, you can see that he has 15 years of telecommunication experience in the space. Anil Verma, one of our initial investors and the partner as well, he has been into telecommunication space as well. He had Bell dealership underneath his belt. He started with one, grew to 10, and sold it to a bigger dealer. So we've got lots of space in this category itself of scaling from one to capturing market share and exiting very well. Jason Vanderberg is a publicly renowned CFO. Jay Berninski is our independent board chair, who is also the VP of EPCOR. Graham Barr and Frank Sir are legal counsels. Jeff Lloyd is the ex-VP of Stantec. And Rob Cole is capital markets from ADB. So as you can see, guys, we've got a good board as well with lots of experience in the public space, along with leading companies in higher markets. This is our corporate information. So we've got 73% is owned by the insiders. Basically, the three faces you've seen, that's us actually owning 73% of the company. So we are our public float is close to about 37%. This is very dear to us. We are all in the go itself, and like I said, our shares are tied into escrow for next 3 years. So we are in for the end game. We've got warrants and option outstanding. If anybody has questions on the slide, I can move forward. Yes.
Yeah. The 25% is like under insiders. Maybe that presumption is I don't know that all of 25 now. Stock is trading at the what price now?
22 cents.
What's your cost?
So we went public. So we got shares at the same rate as our IPO launch, so 12 cents. Correct. That's our cost base. So I'll tell you. So I was 50% owner of the first the company I sold to Mobile Clinic, and that we sold it for 4 times of the revenue.
100 million revenue.
Yeah, well, it was we sold it for like $4 million in revenue. Correct. So other tools were across 2 countries itself. So when I sold it in India, I grew that from 1 location to 10, and I sold it out. Comparing to that value, I think it was close to about 2.5 million. And my second one, I sold it for 3.5 million. So these are the investment highlights. As you can see, guys, like this is a growing category itself. It's quite, and it's one of the daily necessities for everybody else. We've got exclusive OEM partnerships and insurance we've got OEM partnerships and insurance partnerships across the major players in the market itself. And the consolidators of this industry itself are these insurance companies and the telecoms. So we are in this in the correct limelight, and we have all the partnerships and relationships in places to execute what we are doing. Yeah. This is the warrants and the options are untied to this corporate structure. No, they're not included in that. Yeah, correct. It's pure dilution. So yeah, so guys, so we got an active financing in place right now. We've closed our first tranche a couple of weeks back, and our final tranche is about to close next week. So if anybody is interested to participate and be part of this technological marvel ever created, which is cell phones, yeah. This is updated one, correct. With the first tranche, which we closed, this is updated with the first tranche. So the private financing we are doing is 2.5 million, up to 4, and we've got price reservations up to 4 million. And we've raised close to about 50% already, and our second tranche is on track to be closed next week. That's going to be another close to 5 million additional shares. Well, I didn't got a question basically. Like, what's your question? No, so basically when we went, so we just closed the first tranche. So this number that updated to the first tranche, which had 5 million close to additional shares. So the second tranche will have another 5 million being added. Correct, 5 million. That's how 20% there. Correct.
So on a trailing 12-month basis, what's your kind of financial metrics you're rating at right now, approximately?
So,
Getting that.
sorry, which question is that again? Like
20%. 33 million, I don't know if you have any debt on top of that, big debt.
Yeah, we do.
How much?
Close to about 9 million.
9 months, so it's all 33 million, 405,000. Yes. What did you do in revenue in the last year?
We did about $10 million in revenue.
Okay.
And 200,000 in revenue.
All right, and with the announcement and the street video this morning, do you disclose the number of something that was required?
So we acquired at one time.
And any multiple disclosed on EBITDA or?
Well,
It's all,
yeah.
so the company that required, she was going to million revenue. As well as the statement, that's the most, they're doing, it's 4 million hospital. Okay. And the growth up from 10 million.
How is the mobile clinic and those types of businesses, how are they performing now?
Well, mobile clinic, the first thing which TELUS actually did when they acquired mobile clinic is that they started underwriting their own insurances. So it was a strategic acquisition for TELUS to increase their market share within Canada. So there were many caveats involved when they acquired that, and the other carriers have not done it yet. I can go back to the slide and explain you. They are still growing the number of stores. They've actually entered into different markets as well. So they have introduced additional revenue stream through mobile clinic of refurbishing devices and selling refurbishing devices within mobile clinic channel, which they get back from the consumers. So historically, TELUS was actually giving the phones back to the manufacturers itself. To the insurance companies back, because they were the one insuring those devices. So if you were going back to the store, they were giving back to the insurance companies. But since mobile clinic got acquired, TELUS has their own repair arm underneath their belt. So they are actually, giving all that repair business to their own locations. They are, instead of giving the devices back to the insurance companies, they're taking those devices back and giving it to mobile clinic for refurbishment, which is costing like $50-$200. And mobile clinic is selling them for $400-$500 in the market. So that's an additional revenue growth.
It's also the growth that they acquiring businesses as well right now.
Absolutely, because in 2023, we were approached by Rogers. We were approached by TELUS as well, and we were approached by Assurant to actually, to be acquired. And we had to politely say no, because we know where the value of the business is going to be down in next couple of years.
I'm a bit confused with the growth slide, because it looked like the numbers, the packet said that the 23, 24, and trailing 12 month revenue was all 10 million. So is that true?
So 23 and 24, we were about to go public itself. So we were working, so all the money which we were actually generating, we were not reinvesting into the growth. We were reinvesting into the growth of our IPO launch. So that's where so we did not reinvest that money during our growth procedures in 24. But in 25, we went public and we started reinvesting back again. So that's where you're going to see a jump in 2025.
So that is true, that's.
Correct. Correct. Correct.
And so the plan is to grow that is the acquisition.
Correct. Yes.
So that position you need to average store revenue per store is about 2,000, just over that. How long will it take to go, and is it possible for it to get closer to your 200,000 that you have right now on focus?
So those stores which we acquired, they're generating close to 200,000, which you are right. So we've on an average, Dr. Phone Fix stores generate about 330 to 340. So immediately after the acquisition is completed, we went into a definitive agreement immediately once it's closed in like next few days. We will be putting all our Dr. Phone Fix procedures and implementations into those locations itself, and it takes about 21 days. That's our proprietary training program as well. There's no schools in Canada who train individuals on cell phone repair courses. We have our own proprietary training program, which we bring in individuals, train them in 21 days, and at the same time, they get Apple and Samsung certified too. So in 21 days, those stores will be converted into all the procedures which we have in Dr. Phone Fix, so their revenue will go up. Correct. Yes.
Still 95 million. And so is there a certain number of stores that you're looking at it, or a certain revenue per store in order to better profitability to the bottom line, and do you have to quantify it?
So historically we've been growing. We've been opening up 10, 15, 14 locations every single year. So all that money which we were generating, we were putting back into the company. So that's the reason you see a negative income at the moment. So the more stores we are acquiring, we are projecting with this 6 locations which we have acquired, and plus additional 5 more which will be opening up within this year. So close to 45 locations, we will be net income positive. Bro, yes. We've already got iPhone 17 broken in one of our locations today. So it's not getting, they promote, everything is promotional. They're promoting it's durable. Yes, it's durable for sure. The durability has improved, but it still breaks. It's still, and when it breaks, it still causes an arm and leg. So. Correct. So when we launch our first location, it takes about 6 to 7 months just to ramp up those revenue, and yeah, and our gross margins are close to about 53 to 55% at a store level. Our gross margins are 53 to 55% at a store level. So it's all the locations are on its own, they're positive, in a better positive, but we have corporate expenses, we've got growth expenses as well, like all the relationships with the manufacturers and the insurance companies, they have implementation cost involved. So that goes back into the stores, and that's what you see the negativity or the net level not available at this moment.
Can you give me a sense of so there's the repair, certified, pre-owned, and accessories. What's like the profile of margins for each of those 3? So like repair, like that, over 50 and accessories are below to average out?
No, actually accessories are close to about 75% in margins. Our repairs are above 55%. and our phones are close to about 32, 33%.
Yeah.
Correct. I guess we are in with time, but you're welcome to actually come into 20. Oh, there was nothing? Okay. Okay. I think somebody was standing outside and she was showing me the numbers also. I thought that we were in.
Well, that's, I don't know, maybe all, sorry, but, so why wouldn't you franchise? What, like, if the goal is to get, like, smart down, I guess is there a reason not to franchise?
See, this isn't the franchises. Back in the days, the franchise was an option, but not anymore because this industry is getting expensive. To actually for a franchisee to re-implement or put money back into the business itself of buying phones or parts being expensive as well altogether. This is the reason if you're going to look at this slide, tell us that where does
Why would franchise?
yeah, so Assurant acquired GPR, but when they acquired Profit Geek, they were all corporate. And us, we know Assurant very well. We are in good strategic partnership with them. They have given us the feedback that, this industry is expensive. The franchisee does not want to actually reinvest into the business because the phones are expensive, the parts are getting expensive. So leaving this as a corporate model makes sense because then the corporate can push down the inventory, push down the products to generate more revenue.
Two questions.
Right.
Invest back in the business. What are you investing back in the business other than, acquiring? What's you do X amount of sales, you do 10 million sales. How much of that goes into, maybe already used the wrong sort of terminology, but what's your steady state maintenance CapEx, I guess? You say reinvesting back in the business, like quantify that.
So reinvesting back,
Not including acts.
not including acquisition, but
I can hear you, whatever.
okay, no, you. Oh, so
Oh, because it's online.
okay, all right, okay. Okay, so so when you mentioned that, so every year oh, no, so yes, so okay. So when we are reinvesting the business back into the businesses, that every year we've been introduced new partnerships, new procedures, which have been demanded by the manufacturers itself. So it requires new tools, new product line. We have to put back. That's an additional cost on top of what we currently have. So if a new phone gets launched, we have to bring all that additional equipment, tools, parts, as per our contractual terms to bring it into the store so the stores can repair on those devices. Same goes for the insurance companies as well. When we partnered with them, we have to tweak our procedures in places so that they're comfortable, which actually added more cost strains on our business. Again, those cost strains are for corporate expenses just to monitor it, but everything goes down into the locations. That is the assets what we have increased in terms of tools, in terms of inventory at the store level.
Yeah, $10 million for 12 months revenue. Quantify what reinvestment is, your portion, actually the partners required.
So reinvesting, so when you say reinvesting in the business, meaning is that
outside of acquiring businesses, separate category, you find on what does it cost you per dollar you do sales to reinvest maintenance CapEx in your business?
so Jeff, I think we've talked about this previously as well, is that when we are investing into the businesses, providing more phones is an additional inventory. Buying inventory in bulk as per our contractual terms with Assurant, buying more inventory back into the stores, giving them more. So if you're gonna, so all that cash coming in is going into the business again. We are not taking out cash for other purposes itself, is going back into the company as inventory, as procedures, as tools, and everything else. So I guess that's your question is, or I'm still not understanding your question.
Yeah. You're trading 4 times the issue revenue for the 12 months, the requirement of 1 time instead of 2. Can you provide some metrics on these, deals here?
So Assurant and Assurant deals are not publicly announced how much they paid. TELUS is publicly announced they paid about 165 million for 80 locations. That's 10 times of their revenue because Mobile Clinic was generating 200,000 per store. TELUS.
How much that is, has a lot of vertical. You're not vertically integrated, but TELUS is a provider. They have a reason for a footprint. I'm assuming they would pay X number of funds for revenue, i.e. they're paying administrative or buying. What is a non-strategic, that would any of these non-strategic wireless associated?
See, Assurant is a strategic acquirer. Assurant is a strategic acquirer. They acquired these businesses so that they can actually, retain their telecommunication business as well. Because what TELUS did again, when they acquired Mobile Connect, they started underwriting their own insurances. They increased the buyback amount of when somebody comes in from trade-in. So back in 2019, if we go back, TELUS used to offer $50 or $80 or $100 for a trade-in amount. Suddenly, after acquiring Mobile Clinic, that amount went up to $200, $250 per device, because now they can actually sell it within their network of Mobile Clinic, double of what they're making right now. Plus, they got additional stores to sell their more plans. So Mobile Clinic, with every single phones, they try to push consumers to actually sell their non-TELUS plans, which are Kudo and Lucky Mobile. So they sell those plans as well. Along with that, that's an additional consumer which is coming on to TELUS networks. And plus, Rogers, Bell, and TELUS, they share a very thin line between competition itself. And if you're going to look at the last quarter results for TELUS, TELUS has increased subscriber database versus Rogers and Bell have shown a decline in subscriber database. So this is one of the most integrated which they have done. And if you don't know this, but Jeff, TELUS is the first company who introduced 2 years back a leasing plan on the phone, and the other telecoms had to follow. So before 2 years, they were all contracts. So after 2 years, you used to keep the phone, you own the phone. But now you can take the phone on a lease, give it back to the manufacturer, come back after 2 years, give it to TELUS, and TELUS technically has that phone for $0 now, because the leasing plan has paid out for that phone, which they gave it to consumer. And when you are buying a phone on lease, every single individual is actually taking insurance as well on it. So that's a vertical integration which TELUS has implemented by acquiring Mobile Clinic. Rogers and Bell have not done it yet. But if Rogers and Bell have to do and launch their own plan similar to what TELUS did, it's going to be a market game for them.
Okay. Thank you very much for taking answering my question.
Yeah, thank you.